Welcome to Research Business Daily Report, made possible by RBDR's exclusive community at the crowdfunding platform Patreon.com. Please visit patreon.com/RBDR to find out how we can help you and you can help us. I'm Bob Lederer. So by now you know that German software giant SAP has entered into a deal to buy Qualtrics for a pure $8 billion in cash. And that makes the combined heads of the Smith family, led by CEO Ryan Smith, billionaires 3 times over. But how did this deal happen, especially considering that tomorrow, Thursday, November the 15th, Qualtrics was scheduled to ring the bell at the New York Stock Exchange to get the trading day started, and it was all part of its IPO that had been announced a couple of weeks before. The IPO had already generated 13 times the number of investors that had been originally sought by the company. And Ryan Smith was guaranteed continuation of his Qualtrics stewardship either through the IPO or, as it turned out, with the sale to SAP. And it is reported that Smith's sell or don't sell stance swayed back and forth several times before an agreement with SAP was actually sealed this weekend. In fact, Smith told reporters that he was under absolutely no investor, employee, or financial pressure to take the company public. And in fact, the IPO had been pursued solely to create the experience management category, which Qualtrics is so proud of having launched. When push came to shove, however, Qualtrics' potential gargantuan gains in short order as a subsidiary of SAP were just too overwhelming for Ryan Smith to ignore. In fact, he commented that it would have taken 10 years to do outside of SAP what would happen with this deal with SAP. One way to look at that upside, Qualtrics' customer list for its real-time window into consumer sentiments is a very nice 9,500 companies. SAP has 455,000 companies worldwide doing business with it, which touches 77% of the world's transaction revenues. SAP's universe of companies would immediately become prime selling territory for Qualtrics as the SAP sales team went to work. The shiny new object that they could put in front of SAP businesses in the form of Qualtrics would offer the ability to capture a more complete world of customer, employee, partner, business perceptions, and impressions of performance by those businesses. There is another less rosy perspective from SAP's viewpoint, and it came from Fortune magazine's Aaron Pressman and Adam Lashinsky, who said that $8 billion is an astounding price for a company whose annual revenues are barely tens of millions of dollars beyond $300 million a year. Mirabaud analyst Neil Campling called the whole thing an expensive plan for SAP in order to buy growth. By the way, SAP is borrowing $7.9 billion to fund this offer. SAP, which is shifting its enterprise software business from an on-premise service to the cloud, sees the deal as the best way to bolster its CRM management software business. CEO Bill McDermott calls the Qualtrics acquisition transformational, and he compared it to the potential impact on SAP to what Facebook got in the way of a bonanza when it acquired Instagram. McDermott confidently stated that Qualtrics' projected 40% revenue jump next year, that's 2019, will actually remain a standard under SAP for a half-dozen years. He called buying Qualtrics, quote, the biggest idea in my lifetime, and added to that, it is a pure upside situation. And he said that the Qualtrics-SAP combination will establish an edge for SAP over competitors which still rely on crunching backward-looking figures. Never actually saying the company name Salesforce.com, which is SAP's primary competitor, McDermott clearly fired at that target, commenting about Salesforce.com's headquarters, saying, quote, one of the traditional players in this space ordered too big a building. The big picture for us in market research, well, I think it was summed up very well by Toluna SVP Phil Ahad, who said Qualtrics' acquisition reaffirms that consumer insights are becoming more deeply integrated into the everyday business processes of the most innovative brands. SAP and Qualtrics say they plan to close their deal sometime in the first quarter of 2019. That's your Research Business Daily Report, made possible by members of our exclusive community on the crowdfunding platform Patreon.com. RBDR is produced thanks to the interest and the support of the regular viewers of this daily news video. Now, we always acknowledge our latest RBDR patron or patrons, and we are putting out thanks today to John Lewis. Please join our community yourself by visiting patreon.com/RBDR and then selecting the level of patronage that best suits you. We hope that you have a great research day, and we will see you back here tomorrow.